welcome back. Let's talk to Dabur India now, which announced results. Sunil Duggal, CEO of the company, is with us. Sunil, afternoon. Let's start with the margins, which have seen a bit of a squeeze because of probably higher interest costs. Can you take us through the kind of pressures you're witnessing there?
Yeah, I think the EBITDA margins are pretty stable, and we've shown a 28% growth, so no slippage there. If you see the PAT line, obviously there's some corrosion there because of high interest, depreciation, and most importantly on account of higher taxes. So that's where the shoe has pinched, but otherwise we've been able to manage cost by shaving off some ad pros and meeting indirects, etc. costs quite well. So the EBITDA line hasn't shrunk in any substantive measure.
Sunil, hi, afternoon. But there has been a shrinkage in your operating profit margins. This time around it's come in at sub 19%, while you've been enjoying that 21, 22% in the last many quarters. So you are seeing commodity cost pressures, right? Will you be able to sustain margins at these levels, or do you think it will slip lower?
I don't think it'll slip lower than what we've seen in the fourth quarter, but there's not likely to be much increase over the next 2 quarters. I think inflation for the next 2 quarters is going to hurt us, and we'll have to find ways to mitigate that. But there's no let-up in the inflation environment, as we all know. Hopefully by the 3rd quarter, we should see some slackening off, or the price increases would come into effect to neutralize it, and we'll go back to the good old EBIT levels of 21, 22. But it's a hard call to take at this point in time. I think we'll have to just navigate the next couple of quarters with a lot of care.
What's the basic volume picture looking like overall at the aggregate level and in individual segments as well, Sunil?
The demand side seems to be fine. No problems there. I think we'll be able to, despite fairly high price increases accounting for 7 to 8%, we should be able to maintain a volume trajectory of around 10% for the domestic business, which is pretty good. The other upsides are, of course, the M&A piece, which is proving to be quite accretive and which should contribute reasonably substantially to the bottom line in the current year. So there are some upsides, but I think there are problem areas like domestic inflation and unrest in the Middle East and North Africa. These are the 2 areas of pain.
Could you break up the segments for us in terms of volume growth?
For the domestic business, that's easy to measure. The volume growth has been around 10 and price around 5 for the quarter just gone by, for the year just gone by. And going forward, we would see probably something like 8 to 10% volume and 5 to 7% price increase, aggregating to around 15 to 17% for the domestic business.
Are you seeing market share erosion or market share increase in the 2 or 3 key segments which contribute most of your revenue?